Good morning everyone and welcome to Morning Markets from True Potential. Today I'll discuss how equity, bond and currency markets performed yesterday, then touch on some of the important economic data that we've had out from the US and also the UK. Yesterday, equity market returns were mixed, with cyclical regions outperforming. The FTSE 100 was up 0.4%. In Europe, there was up 0.3%, whilst the US markets were down. The S&P 500 was off 0.2%, and the Nasdaq was down 0.7%. The two US markets pulled back from all-time highs set on Monday. Cyclical sectors such as energy, financials, and industrials outperforming. In Japan overnight, they were a little bit weaker, down 0.5%. We had plenty of economic data out over the past 24 hours. However, it was data from the US which investors were really focused on. We had US retail sales, which moderated in May, down 1.3%, although importantly we saw significant upward revisions to the previous month's data. In April, the data initially reported 0% month-on-month figure. However, this was revised up to 0.9%. So in dollar level terms, the May spending number is actually a bit better. Vehicle sales saw a noticeable decline of minus 3.7% over the month, with production supply chain issues curbing supply rather than a drop in demand. Sales linked to service sectors which are benefiting from reopening continue to expand, particularly in clothing and food and drink. We also had the US producer price inflation data, which measures the cost to producers of products, was up 0.8% over the month, higher than the 0.5% forecasted. The average rise between 2017 and 2019 was 0.2%. So the reading, so that gives a bit of context for the reading. This morning, we've also had consumer price inflation from the UK, which surprised to the upside, accelerating to 2.1% from 1.5% in April. We can see in the chart here how consumer price inflation has trended over the last few years, dropping noticeably last year, but accelerating in recent months in response to economies reopening and supply constraints. The chart also provides a breakdown of inflation. We saw spikes in prices of clothing and recreation and cultural categories. Also, rising prices of petrol were also a key factor, which has seen a big year-on-year change. With interest rates at 0.1% and inflation now at 2.1%, it really highlights the importance of doing more with your money as inflation is eroding the value of cash. In bond markets, we saw a little bit of movement. We saw a little bit of weakness in the US 10-year Treasury yield. That yield pushed up 1 basis point to 1.49%. And also in the UK, we saw the 10-year government bond yield rise 4 basis points to 0.76%. In currency markets, we didn't really see any material movements. This pound is against the dollar is at 141, and the pound against the euros a little bit stronger at 1.16. With returns mixed yesterday from both equities and bonds, the market is still largely in waiting mode for the Federal Reserve Committee meeting, which starts today. The big question is whether the chair of the Federal Reserve, Jerome Powell, will say the central bank has begun informal discussions on tapering assets. Thank you for listening, and we'll see you again tomorrow.
Subscribing to True Potential YouTube channel is quick and easy. Simply go to your YouTube app on your phone, type in True Potential and press the red subscribe option. You'll then be notified as and when new videos are released.